Let's get into a bit more about what the impacts are to the insurance market
Sure.
in general. And we talked about the solar industry and in its impacts, the solar panels, having to be transported out of state. I know there's some potential transportation pollution liabilities issues there if it, a truck upsets and overturns with that type of stuff. What are some other insurance implications that you're seeing at present with the green energy movement?
Boy, that's it's a multi-layered question. So let me see if I can try and answer that maybe all the way at the beginning in the underwriting stage, and then maybe perhaps on the end with some of the exposures and perhaps the attitude that claims folks might take towards it. There's been a lot of talk about net energy metering, and it goes by the acronym NEM. So California has a program called net energy metering, and it's a way for them to offer some subsidies to the consumers or purchasers of solar panels, in particular residential solar panels.
Mm-hmm.
What they do is they'll give there's a slight subsidy towards how much money that homeowner might earn from selling their energy back to the grid.
Right.
With NEM 3.0 that got pushed through and passed in April of 2023, they cut that significantly. And what that has done is it's doused flames on the demand for solar panels in California. And what's interesting with this industry is wherever California goes, the rest of the country kind of follows. Or maybe another way to say it is California, many times leads the way with these green initiatives.
Yep.
And then the rest of the country will see that and then adopt it in their own way, whatever makes sense in their own jurisdiction. One of the repercussions that came from that is there was a loss of roughly 15,000 jobs, specifically in the green energy space and solar in California. So we have seen a significant reduction in demand for solar panels installed on people's roofs. And that has led to a reduction in revenues for solar contractors installing the panels. So a couple things going on. You're seeing reduction in exposure base. As your exposure base goes down, your pricing is going to go down as well. So we're seeing a reduction in premiums for these, not from a rate standpoint, but an overall exposure base standpoint. What we see both in our bonding facility, and I see it on a brokerage basis as well, is these premiums are starting to reduce, whereas the previous couple of years we were seeing exponential increases in revenues. We were seeing a likewise obviously increase in total premium, although rates were compressing. Now the expectation for rate has already been compressed. Now a reduction in exposure base, you have carriers that are not taking in as much premium. We all know that claims come in after, of course, you've got a latent effect or a latent receipt of a claim. So if you're not taking in enough premium to cover those claims, or rather if you're not taking in enough money to cover historic liabilities, then you're going to have a crunch when it comes to your book. We're also seeing a reduction in the number of carriers that are playing in that space. So I think maybe the reduction in supply of limit from fewer carriers chasing those accounts might have kind of been in lockstep a little bit with the reduction in revenue, so it hasn't been as much of a disruption. But we are seeing a reduction in premiums chasing or carriers chasing that premium. So I think that's one repercussion we're seeing in that space. There's been a waning interest by carriers in the solar industry. Let's look at the environmental exposures. What are these solar contractors doing? They're installing panels on your roof. Essentially, this is a very specialized roofing contractor.
Right.
Perhaps they're not putting shingles on your roof. They're putting a large metal and glass panel on your roof. And they're going to have to fix that equipment to your roof with some kind of fastener, screws, brackets, what have you, and they're going to have to damage the integrity of the roof. What that does is it creates a pathway for water to enter the building envelope. And as we all know, you need three things for mold to occur. You need mold spores, Those are ubiquitous. You and I are touching them right now. It's everywhere in our environment. You cannot avoid it. They need a food source. The food source is anything that's organic. And the things that are organic in your house, wood, paper. That's a lot of what the construction of your home is. So you've already got two of the holy trinity for creating mold growth, right? The third is you need water. When you fasten these panels and you damage the integrity of the roof, you're creating a pathway for water to enter the building envelope. And now you've got the holy trinity of mold growth. You've got a food source, you've got mold spores, and you've got the water. So that's your main exposure with this. When you're looking at the waste stream that's created, of course, you're going to have maybe some different lubricants or maybe a solvent or cleaning liquid that you're going to use for the panels. But I would say the main exposure with the solar is going to be from a non-owned disposal site angle. And it's going to be disposing of these panels that have some metals built into them. What's interesting is to try and evaluate where that exposure or who might own that exposure. For example, whenever there's a release at a landfill, you're going to have the landfill that's responsible because they were negligent in making sure that their landfill had the proper integrity to hold the material and not allow any material to escape. However, you're also going to have liability if you are that waste generator. Now let's look at it from an industrial or commercial standpoint. If I'm a chemical, manufacturer, if I do something or use a chemical or create a product that has some hazardous components, and I use something and I dispose of it, I am the waste generator. Under RCRA, which is federal code, I am responsible as a waste generator for that waste, and there's strict liability that ties me directly to that waste even after I've disposed of it. As a company, as a corporate entity, hopefully I'm still in business. I can generate enough revenue to cover that issue that I've created through creating waste. And I can address that if and when the federal or state EPA comes back to me and seeks compensation for my contribution to the landfill pollution condition. I ask you, what happens when a homeowner is responsible for generating that waste? Are they going to be ready to receive a notice from the federal EPA that their portion of contribution to a pollution condition at a landfill is, $23,000?
That's a tough pill to swallow if you're a homeowner and all of a sudden you're getting tied into that liability process, right? That liability string. Could they argue that, well, it's the manufacturer, really? I was just using it. I didn't really build it.
I mean, you and I both know these manufacturers are mainly based overseas. So, our laws may not capture a foreign domiciled manufacturer. Perhaps there is, some kind of a caveat that allows homeowners to be exempt. So let's pull that thread. What if you are an investor and you are an LLC or a company that owns a number of single-family residential properties? I'll tell you, in my town, we have had people knocking on the doors, door to door, and these are investment companies seeking to buy homes. I don't think you can fully remove yourself from that liability. I'm very curious to see how that happens, how that plays out.
Let's play that out going down that scenario. They remove single-family home exposures from that string of liability, whether it's a company or investment company that owns it or individuals. Who ultimately is going to pay for it then? The taxpayer, potentially.
Of course.
Right? Because the government's going to have to pay for the remediation and abatement at some point. That's coming out of our pockets as well.
Correct. That's a very good point. I mean, frankly, that's what the Superfund amendment to CERCLA is an amendment to create a large fund that we all contribute to address abandoned properties or properties that are blighted or have contamination that have been abandoned by the historic property owner that was the responsible party for the contamination. Yep. So when you see a landfill that receives a Superfund designation or gets put on the national priority list, you will see them try and defray the cost to clean that up by roping in the generators of the waste. It'll be quite interesting to see how this plays out. Will they be able to pull in, a homeowner as a generator? or an investment company as a generator? What are the legal costs that are going to be associated with that? And at the end of the day, someone's still got to clean it up.
So I was just thinking of a scenario that's sort of relevant in my historic space, talking about soccer. So I know there's a complex in Southern California that was, it's like 20 some odd soccer fields, and it's built on top of a landfill. What if that landfill had cadmium and some of these other metals in it? Are we going to allow development to go on top of those type of landfills? And
Right.
if so, what are the implications for that? Because if they're using groundwater that's being contaminated by the cadmium and they're pumping that back into the grass and kids are coming into contact with it, what are those issues going to be down the road? And so, it's just, it can go in so many different directions, the implications, and obviously we haven't addressed them all yet. So be curious to see how we do that going forward.